Okay, in this video, we'll talk about cash management as we continue our discussions on working capital management. Okay, so what are the different motivations for holding cash? You hold cash because of three reasons. One is the transactions motive, precautionary motive, and speculative motive. Transactions motive is similar to what we discussed in inventory. We're holding cash because we're using it for daily transactions. Okay. And we might hold additional cash for precautionary matters, meaning we know that there's a chance that the costs of the costs can increase. If that's the case, you have an idea that that unforeseen thing can materialize, and so therefore uh, you're holding additional cash for precautionary matters. Okay, and you can have additional cash rin naman because you want to hold it for speculative purposes. Baka sakaling may pag-investan tayo, sige, let's hold additional cash. Okay? So usually these are the three motivations for holding cash. The base case is transactions, so that meron kang pangbili. The second is additional cash just in case may kailangan ka pang bilhin, right? The third is speculative. Baka may opportunity for me to earn more money, right? Let me invest it. And you need additional cash for that. So those are the three motivations for holding cash. Next, we define what's called the float. Okay. So the float are funds that have been sent by the payer, but not yet usable funds to the payee. Okay. The float is actually a concept related to check payments. Okay. So ano ibig sabihin ng float? Let me illustrate it. So for example, you are A, I am B. A sold something to B, sells to B. Okay? So meron ka ngayong time from billing to collection, right? Essentially, that is the total receivable time or days receivable. Okay? Pero pwede kasing mangyari na si B nagbayad na pala. Paid already. Pero ang pinangbayad niya, for example, is check. And number two, the check was mailed to you. Okay? So may time pa yung check bago yun makarating sa'yo. Right? So from B to the address of A, there's time related to that. When A receives the check, there's processing time. Okay? At pag yung check na deposit na, there is clearing time. Nati-clear yung check in the financial system bago mo actually makuha yung pera. So itong time na to, ito yung time na sa point of view ni B, paid na from his point of view. Nabigay na niya yung check eh. Pero ikaw, pinoproseso mo pa. So the time na nabigay na ni B yung check at ikaw pinoproseso mo pa yung check, that's the float. Okay? That's why there are three components of a float. The float has three components: the mail float, the processing float, and the clearing float. So the mail float is the time delay between the payment is placed in the mail and when it is received by the receiver, the payee. Okay? The processing float is the time between the receipt of the payment and its deposit into the firm's account. Kasi pag ni-receive mo yung cheque, i-receive yan, lalagyan ng resibo, ipo-process, right? Lalagyan ng i-account, pagka-account, i-deposit. Right? That time is the processing float. Now, the clearing float is from the time the deposit of the payment is made until makredit sa account ng kumpanya at nag-clear na in the banking system. So that's clearing float. So yung float na yan, those are actually unnecessary delays in receiving cash. Right? If you can make the float zero, then that will free up funds and you can use the funds for investment. So cash management also includes management of receipts and disbursements so that you can reduce the float as fast as possible. Of course, if the payment is through wire transfer, electronic wire transfer, or through online accounts, di ba? For example, ikaw, magbayad ka ng GCash. Instant yun, di ba? Right? If you pay through GCash. So therefore, the float instantly becomes zero. There's no delay from the time that you paid and the time that your counterparty received the payment. So in that case, the float is zero. So actually, the float is only relevant for check payments, no, or in cash, for example. No? Kasi pwedeng pipila ka para mangolekta, etc. So those are all part of the float of the company. Okay. In terms of managing receipts and disbursements, your objective is, of course, to speed up receipts and delay disbursements. Speeding up collections reduces customer collection float time and thus reduces the firm's average collection period, which of course decreases the cash conversion cycle, frees up cash for the company. One technique for speeding up collections is the lockbox system. So what is a lockbox system? So a lockbox system is a collection procedure in which customers mail payments to a post office box, PO box, that is emptied regularly by the firm's bank and then automatic pinoprocess na niya yung payments. Okay? So nababawasan yung processing float, right? Yun yung nagiging zero. Okay? This speeds up the collection time by reducing the processing time. Okay? As well as mailing and clearing time. Clearing time usually won't be faster because standard naman kung gaano katagal ang clearing ng cheque. Right? May cut-off ang bawat bangko. So pag na abutan ka ng cut-off, next banking day na yan. So wala tayong magagawa doon in terms of clearing, right? But definitely it will reduce processing time. Kasi yung mail papunta na agad doon sa PO box na ini-empty ng bangko at automatically dinideposit na sa account mo. Okay? Of course, you also want to slow down payments. The float is also a component of the firm's average payment period. So if you increase the payment float, it's in favor to you. Okay, so the firm may benefit by increasing all three components of the float, and that float that we're talking about here is the float related to the payment of the company. Okay. You can do this by controlled disbursing. Many companies use this, that there are strategic mailing points and bank accounts and specific banks where you can get your payments. So for example, a lot of companies do this. I had a client once that, di ko na sabihin kung ano, but I have a client once na ang kanyang disbursing bank is Standard Chartered in Makati. They don't mail the checks. Okay, you have to go there and claim it yourself. And there's only one bank. It's Standard Chartered Bank in Makati. You need to go to their office to collect. So it's sort of parang medyo delayed, di ba? Kasi kung taga malayo ka, you really have to go there for you to collect. If your office is in Laguna or in Quezon, you have to drive up to Makati to collect. So it's sort of indirectly delaying payments. Okay. Another concept when it comes to management of receipts and disbursement is cash concentration. Okay, it's the process used by the firm to bring lockbox and other deposits together into one bank. And that bank is called the concentration bank. What's the advantage of having a cash concentration bank? Okay. First, it creates a large pool of funds for use in making short-term cash investments. Kung yung cash mo nasa isang bangko na iba-ibang accounts lang, okay, then mataas yung pool mo of cash. And therefore, you have the leverage and ask the bank to have a higher deposit rate. Or you could, since mataas yung cash balance mo sa bangko na yun, pwede mo siyang i-leverage na, baka naman pwedeng i-invest to sa higher yielding investment than your normal customers. Okay, that's the advantage of having a large pool. Okay. Second, concentrating the firm's cash in one account improves the tracking and internal control of the firm's cash. It's easier to monitor because you have fewer accounts to manage. Okay, kokonti lang ang binabank reconciliation mo. And so therefore, it's easier to keep track of all the transactions of a company. Third, having one concentration bank enables the firm to implement payment strategies that reduces idle cash balance. Okay? Uh, because nakikita mo lahat yung cash in one bank account or in one bank, and so therefore mas madali mag-strategize in terms of how to balance and how to invest idle cash balances. Of course, the downside is that there's concentration risk. When you pool all your cash in one bank, if that bank goes under, then you lose your cash. Okay. Of course, there's deposit insurance, but deposit insurance is only 500,000 per depositor. It's not by bank account. So therefore, kung meron kang 5 bank accounts in one bank, that bank goes under, PDIC or the Philippine Deposit Insurance Corporation will only pay you 500,000 even though you have 5 bank accounts in that bank, because the insurance is 500,000 per depositor. So that gives you a considerable amount of risk. So you also need to study yung banking relationship. Okay? So a variety of mechanisms are available for transferring cash from the lockbox bank and other collecting banks to the concentration bank. So usually you do that by wire transfer or electronic data transfer. So usong-uso na to ngayon. In the past, hindi. No? Uso pa rin yung cheque. Bakit sine-cheque? Because it increases the float. It increases the payment float. Right? So kung ako, yung company, I would actually still prefer to pay through checks because it increases my payment float. And therefore, the cash stays with me. It takes a longer time for my cash to transfer from me to you. Right? So I am incentivized to actually have a check payment system rather than wire transfer. Pag wire transfer, when I pay, nasa iyo na agad yung pera. So nabawasan yung payment float ko. Right? Which ties up or reduces my average cash balance. Okay? Now, how do you apply these concepts in real life, for example, or in your personal lives? So this is an example. So Megan is a 25-year-old nurse, works at a hospital that pays her every 2 weeks by direct deposit into her checking account, which pays no interest and has no minimum balance requirement. She takes home about 1,800 every 2 weeks or 3,600 per month. She maintains a checking account balance of 1,500. Whenever it exceeds that amount, she transfers the excess into her savings account, which pays a 1% annual interest. She currently has a savings account balance of 17,000 and estimates that she transfers about 600 per month from her checking into her savings account. Megan pays her bills immediately when she receives them. Her monthly bills average around 1,900, and her monthly cash outlay for food and gas, 900. An analysis of Megan's bill payments indicate that on average, she pays her bills 8 days early. Megan could also invest money in a mutual fund that invests in short-term, low-risk investments, paying 2% annual interest. Pero hindi pa niya ginagawa. Okay? So here, we can apply the concept of float and in this context. So let's try to better understand what should she do. Okay? She should first invest current balances. So Megan can transfer her current savings account balances into a low-risk mutual fund, increasing the rate of interest between 1 to 2%. So that's her 17,000 savings balance. Okay? So, yung savings kasi, hindi naman niya ginagalaw. So therefore, not part of transactionary or transaction or precautionary cash. It is speculative cash. Right? Pang-investment siya. No? That's the reason why that account exists. And so therefore, it should be managed better to invest it in higher yielding investments. Second, Megan should invest monthly surpluses. Megan can transfer 600 from her checking account to the mutual fund, thereby increasing earnings no, by $6. Okay? Kasi yung 600 nilalagay lang niya sa savings. At mukha namang based on her spending, this is also speculative cash balances. And third, as you learned in float, you want to slow down payments. So she can gain 8 days of disbursement float each month. Okay? At kung hindi niya binabayaran early yung kanyang mga bills, pwede niya sanang i-invest yun. No? And therefore adds on to his interest, to her interest income. Okay? Part of cash management is the determination of cash balances. How much cash balance should you maintain? Okay? There are 4 factors that you should consider in determining the target minimum balance of a company. First is the predictability of cash flows. If the cash flows is more predictable, then there will be less variation in terms of the cash flow. And since there will be less variation in terms of cash flows, your target minimum balance can be lower. Kasi wala namang variations masyado. Predictable yung cash flows. So walang kailangang precautionary motive, right? Transactions motive lang lahat yung cash balance na mini-maintain natin. Okay? Next, ability to borrow. If you have high ability to borrow, you don't need too much cash balance. Okay? Kung madali namang mangutang, right? Rather than keep high cash balances consistently, you can lower your cash balance, invest the excess in marketable securities or investment securities, and then just borrow when the need arises. Okay? Now, if you have high cash needs in the future, then definitely you should increase the cash balance. Okay? And if you have compensating balances, you have to increase your cash balance also. What's a compensating balance? Pag nangutang ka in a bank, okay, usually one of the conditions of a bank is that you need to maintain a compensating balance in their bank. So yung compensating balance, it's a deposit amount. No? Deposit siya sa banko na yon na require ng banko as a condition for the loan. And those compensating balances are required to be tied up cash, essentially. Required to be deposited in the bank. And so therefore, you need to increase the cash balance, right, to account for the compensating balances. Now, there are 2 models that we'll discuss in determining the optimum cash balance of a company. Okay, so the first is the BOMOL model. Okay, in determining the cash balance. The BOMOL model has the same logic as the EOQ model. Okay? Kung mapansin mo, yung formula here, very similar to EOQ, right? Because it used the same methodologies. Essentially, the BOMOL model tried to understand what are the costs related to holding cash. Okay? So when you hold cash, what are the 2 costs of holding cash? Okay? 1, okay? The first cost of holding cash is the opportunity cost of investment. Okay? Kasi kung mataas ang cash balance mo, rather than i-invest mo sana yan, no, sa ibang bagay, nakatenga siya sa cash or naka-stay siya as cash. And that cash is not earning any interest or if any, very, very low. Right? So that's one cost of holding cash. The second cost of holding cash, okay, relates to the transaction cost of liquidating investments. Let's imagine, for example, your cash balance is 100,000. Okay. You want to decrease it to 50,000. Okay. So therefore, when you decrease it, you free up 50,000. And therefore, you can invest 50,000 in other in other securities or in other investments that will earn you higher money than holding it, higher return than maintaining it as cash. Okay? However, what is the cost? Madaling maubos yung 50,000. Mas mabilis maubos ang 50,000 kaysa 100,000. Right? And so therefore, you have a transaction cost. Pag naubos na yung 50,000 mo, kailangan mong magbenta ng securities. Kailangan mong magbenta ng investment para i-convert siya from investment to cash. Right? And when you do that, when you convert from investment to cash, you incur transaction costs. Okay? So, parang ito yung holding costs or carrying costs. Yung opportunity cost of investment, parang siya yung carrying cost. At yung transaction cost, parang siya yung order cost. If we talk about inventories. Okay? And using the same principle, Baumol was able to provide what's called the Baumol model of determining the optimal cash balance. Okay? So the optimal cash transfer is equal to 2 times B times T over I. What's the definition? T is the total cash requirement for the period. So kung isipin mo, ito yung equivalent ng demand or sales in inventory management. Okay? B, okay, the cost of transferring funds from MS to cash or from marketable securities to cash. So that's a transaction cost when you sell investments para maging pera. This is equivalent to the ordering cost. Okay? And I is the rate of return forgone on short-term investments or the cost of borrowing. Okay? So ito yung carrying cost. Okay? It has the same principles as the EOQ. Okay? Let's look at an example. So the UP Foundation pays scholarships to 500 scholars at 30,000 per year per student. Okay. Its investments in short-term investments earn 13%, gross of 20% taxes. And the cost per transfer from short-term investments to cash is estimated to be 500,000 per transaction. Now let's determine the optimal cash transfer. Okay, so let's just use the formula. Square root of 2 times B. What is B? B is the cost per transaction, right? Times the demand. And the demand is equal to, there are 500 scholars. Each scholar is paid 30,000 per year, right? So therefore, the total demand is 15 million or 150 million. Okay. So 2 times 50 times 50 times 30,000 divided by, ito is the interest income. But we need to make it after taxes. And the taxes is 20%. And from there, you determine that 379,777 is the optimal cash balance. Okay. And similar to EOQ, we have the same model, right? So here, at the point where transfer cost is equal to the interest forgone, that is also the optimal cash balance. I think this is not correct. Tama ba? Yeah, it's correct. Okay. All right. The second model that we'll talk about is the Miller-Orr model. The Miller-Orr model is called the control limit model. It makes more realistic assumptions that cash flows are variable over a period. So there's an element of uncertainty or an element of variability in terms of cash flows. Okay? Kasi remember, In the Baumol model, it assumes that this demand, T is the demand, total cash requirement. Fixed amount yan. There's no uncertainty. Right? But in reality, this is uncertain. And because there's variability in the cash requirement, hindi yun natitake into consideration, no, in the Baumol model. The Miller-Orr model tries to remedy that by incorporating the variances of cash flows. Okay? And therefore, we must quantify a range of values as the optimal cash balance model. No? It requires the mean and the variance of cash flows, which we'll discuss later. What are the other assumptions of the Baumol model? The distribution of daily cash changes is at least approximately normal distribution. Transfer cost between cash and portfolio is at a given fixed cost. You can determine the fixed transaction cost. Transfer between cash and portfolio can be implemented instantaneously. And the minimum cash balance is determined outside the model. Okay, I'll discuss this more when we discuss the formula. Okay. In the Baumol model, the target balance is one amount. Okay. But in the control limit model, we will define a range. Okay. So what is that range? We'll discuss. Okay. So to determine the Baumol model, we need to define an upper limit, a return point, and a lower limit. Okay. Let's start with the lower limit. The lower limit is set by management. There's no formula on what the lower limit is. Okay, so management needs to decide ano ang minimum cash balance mo, assuming there's no uncertainty. Okay, that's the first calculation. The next calculation, you need to determine the return point. So the return point is Z star plus the lower limit. So this is the LL, lower limit. Okay, what is Z star? Z star is this formula. 3 times B times variance over 4I. Okay, what are those numbers? 3 is 3. B is the cost per transfer from short-term investments to cash, similar to Baumol model. Okay. Sigma squared is the variance of daily changes in cash balance. So you need to look at your historical data, historical daily data, no, and compute the variance of the cash balances over a historical period. Okay, and I is the daily interest rate on marketable securities. Okay, if you compute that, makukompute mo na yung return point. Once you have computed the return point, you can compute the upper limit. So the upper limit is H star plus LL. H star is defined as 3Z star. And Z star is this one. Okay? So kung i-graph natin yan, this is the lower limit. This is the upper limit. And somewhere here is the return point. Okay? So this is the cash balance. Okay? Now, how do you use the Miller-Orr model? No? Okay? Yung upper limit and lower limit are your allowable cash balances. If it breaches the upper limit and the lower limit, then you need to do something. Okay? If cash flows reaches the lower limit, okay, what do you need to do? You need to convert marketable securities to cash and increase the balance up to the return point. Okay? Pag naman nag-increase yung cash until such time that you hit the upper limit, you need to invest your surplus cash until such time that your cash balance hits the lower limit. Or sorry, hits the return point. Okay? Nagets ba yung point ko? So, di ba gumagalaw yung ulitin natin, ha? Let's draw it again. So, this is the graph. This is the lower limit. This is the upper limit. This is the return point. Okay? So, of course, daily, nagbabago-bago yung cash balance, di ba? Pag dumating sa point that you reach the upper limit, no, what is the action? You need to invest excess cash so that yung cash balance mo na lang will be equal to the return point. Okay? At kung dumating yung point na yung cash balance mo hits the lower limit, you need to liquidate cash balance, liquidate your marketable securities and convert them to cash until you return to the return point. Kaya ang tawag return point, doon ka babalik. Okay? Every time there's an action that you need to do. All right? Let's have an example. So consider a financing company which uses the control limit model for managing its cash. The company has found that the variance of its daily cash flows to be 960,000. 960 million rather. Okay. The company's transfer cost from cash to short-term investments and vice versa is 500 per transaction. No? The current interest rate is 13%. And the company has set 50,000 as its lower limit. So determine the upper limit and the return point. Okay. So 3 times B. B is the transaction cost times the variance. Parang mali ito. So paki-correct na lang. This should be 960 million. Not 900,000. Because that's the variance. No, sinabi na yun ang variance eh. 960 million. Right? Okay. Divided by 4 times, the interest rate is 13%, but it has to be daily returns. So to simplify, to get the daily returns, 13% over 365. Okay. From there, you'll get 100, 358. Okay. And what's the return point? Z star plus lower limit. So that's 100, 358 plus 50,000, 150, 358. What's the upper limit? That's H star, which is 3Z star. Okay. 3 times 100,000, 301, 073. Upper limit is H star plus the lower limit. So 301 plus 50, 351, 073. How do we interpret this? So the lower limit is 50,000. Okay. The upper limit is 351, 073. Lower limit, upper limit. The return point, somewhere here. 150, 356. This is the return point. Okay. Again, what's the interpretation? If your cash balance reaches the lower limit, you need to liquidate marketable securities for you to increase your cash balance up to the return point. At kung nagkataon, nakarating ka sa upper limit, you need to reinvest the excess cash so that your cash balance goes down to the return point. So ganyan lang tayo palagi. Okay? You return to the return point. Okay? So other issues with respect to the management of excess cash, excess cash needs to be invested or used to pay down debt to be value adding to operations. Yung excess cash, hindi siya dapat nakatenga lang sa cash. It should be earning money, or you can use the excess cash to pay down debt. Kasi may value yon sa'yo. What is the value? You don't need to pay interest. So yun yung P&L impact of having paid down the debt. So may benefit pa rin sa'yo yun. Even though hindi kumikita ng pera because there's no interest, pag pinambayad mo na siya ng debt, pero at least di ka nagbabayad ng utang. Okay? So what's the criteria for choosing investment for idle cash? Number 1, liquidity or convertibility to cash. We want to make sure that we can easily convert it to cash upon short notice. Right? And so therefore, we want it to be invested in securities that are easily convertible to cash. Number 2, you need to consider the risks relating to that investment. What are those risks? Number one, default risk. Pwedeng hindi magbayad yung pinag-investan mo. Second, settlement risk. Okay? The intermediary does not pay. Okay? For example, if you invest in stocks, there is an intermediary. The intermediary is the broker, right? You have to go through the broker for you to buy stocks. If the broker does not pay, kunyari, you sold already your investment in stocks, okay? But the broker does not remit, that settlement risk, okay? And next is interest rate risk. Interest rates change, and therefore, your investment is subject to risk, no, subject to changes. Lastly, last one to consider is income. Of course, you want it to be to maximize the income as much as possible, subject to the risks that you are willing to take. Okay. What are some examples uh, of cash or investments that you can use? So you can invest in treasury bills and treasury notes. Okay. Pag nakalagay treasury, it means the issuer of those securities is the government. Okay? Ang nangutang yung government. Nag-issue siya ng treasury bill, the investing public provided money to the government. Okay? And treasury bills and treasury notes are like the liabilities of government. No? So this is the debt of government. Okay? So therefore the government needs to pay you back. Okay? So the income in treasury bills and treasury notes are fixed. Okay? Ang pinagkaiba ng treasury bills and treasury notes is the tenor. Usually, ang term ng treasury bills less than a year, 90 days, 180 days, 360 days. No? Ang term ng treasury notes is 1 to 20 years. Mas longer term ang treasury notes and treasury bonds. Okay? It has high protection of capital and high to moderate liquidity. Okay? Meaning, madaling ibenta if it's liquid. Okay? Another kind of investment is time deposit, which the issuer, banks, ang issuer ng time deposits, right? And usually they're less than a year. Okay. Short-term and long-term commercial papers are indebtedness by companies. Okay. So short-term and long-term, so ibig sabihin, the tenor is also short-term or long-term. Okay. So itong mga to, the income is in the form of interest. Kasi indebtedness yan. Pagkakautang siya. Iba-iba lang yung sino yung may utang. So treasury bills and notes and bonds, the debtor there is the government. The borrower is the government. The time deposits, ang borrower ay bangko. Sa commercial papers, ang borrower ay corporates or companies. Okay? You can also invest excess cash in foreign currency. There is no income to it. I mean, there's no issuer to it because it depends on whether the government or not. No. And lastly, you can also invest in stocks, which is referring to the equity of companies. Okay. So those are all options to invest excess cash. Okay. The specific strategies, you'll learn that in your investments class. Okay. This is just an introduction. No? Lastly, the management of those excess cash is usually defined by an investment policy or investment guideline. So in the investment policy, the ceiling prescribed for each type of instrument or investment is set. No? The type of investments are also defined, what is allowed and what is not allowed. And the criteria in selecting the investment instrument is also allowed. No, it's also set out. And so therefore, you have a target cash balance, right? If you have a target cash balance that you have already computed, there can be excesses. Those excess cash balance need to be invested. How do you invest? There should be an investment policy to define how this excess cash is going to be invested. And now you can invest it in different securities. So time deposits, treasury, bonds, etc. This decision was governed by an investment policy. Okay. So the investment policy is part of 145. So you'll learn more in that course about this. Right? Okay, thank you. That's it for management of cash. Thank you.